In today's show, we'll be discussing, is the crypto cycle ending for the 2025 bull run, or is this simply just a shakeout before the next big move towards the upside? Stay tuned until the very end of the show. We have a lot of metrics that we have to look at, some very important data as things are getting a bit sketchy. Smash the like button, hit the bell notification, and subscribe to the channel. Let's get straight into the show content. Banter bubbles on the weekly. A lot of the coins are down, right? It's been major chop over here for the last couple of weeks. 1 week it's up, the next week it's down. So creating that trading range over there for the broader crypto market. But slowly but surely behind the scenes, there are some small nuances that most people are missing, things that are taking place behind the scenes, which is most likely to drive where things are going to go next. So stay until the very, very end. Another big thing to look at is the stock market, which also on the weekly is starting to come towards the downside. And this is probably the biggest risk factor right now for crypto. Now, the stock market V-shape recovered off of the April lows, putting in almost 40 to 50% gains, depending on which stock market you're looking at, with the absence of even more than a 5% pullback. So therefore, of course, if the stock market even sneezes over here towards the downside, it is going to drastically affect crypto. So we're going to have a look at that as well. And then we'll see where the major pivot levels are for crypto, where the line in the sand is for crypto, and where things start to really go pear-shaped. So again, stay till the very end of the show. Smash the like button and vote in the poll over here. I'd love to know your positioning. What is your dominant position in the market right now? Are you spot long, leverage short, or are you just simply sitting in a cash position? Of course, you may be multiple of these, but which is the dominant part of your portfolio right now? Unfortunately, we only get 4 options over here on these polls. So I'd love to know. Now, quickly having a look at one of the lines in the sand is going to be around this key area of interest, because this is a major SR flip. Price is coming back into it. And if we look at the price label, we've got the stop and reversal indicator, which is currently sitting at 102,345. And just above that, we have the 21 weekly exponential moving average at 105,300. And this is rising each and every week. So this is going to be a vitally important retest if Bitcoin does come any lower. Ultimately, what you really don't want to see is when you put in a big candle towards the upside, taking out that low is going to be pretty significant. And that's going to start to shift the bias, because in terms of a broader range, if you're viewing this as an overall range, with this being the range low and that being the range high, with price chopping between the two areas, once you do take out that key level, you have to look at this as a deviation. So that's the answer that we should be getting in the next couple of weeks. Is this simply going to be a deviation leading into 𝗥𝗏𝗪, or is it a backtest into support that's going to lead to higher prices? Now, nobody has a crystal ball, so it's anybody's guess. At the end of the day, as traders and as investors, you want to make your decisions as close to the invalidation point as possible. So this is one of the invalidation levels over here that you're going to be looking at. And of course, you can zoom in on the lower time frames to get a little bit more precise. And that's, of course, what we're going to talk about in today's show. That's one of the things. But the cycle does go on, and Bitcoin and gold have been leading the market. And in terms of a risk-adjusted return, it's been one of the absolute best at the end of July. Both gold and Bitcoin have mostly been neck on neck. And if you're looking to boost your risk-adjusted returns, gold and Bitcoin have been doing most of the heavy lifting over here. Yet to see any sort of major runs and sustainable runs within the altcoin sector. We'll also talk about that today, what you need to see for that to actually take place over there. And you can see over here from Watcher Guru, just in, the White House prepares executive orders to fine banks that discriminate against crypto companies and conservatives. This is a very, very interesting statement coming out from the White House. And the reason being is it's typical of what you would expect towards the end of the cycle. So again, pose the question, is the crypto cycle ending? I think the short answer, as you're going to see now, is no, not yet. But we're definitely in the end phases of the crypto cycle. And we expect that it's not going to last that much longer, maybe just a couple more months, because we've been tracking the 18.6-year real estate cycle, and we're currently in the red zone over here, which is your winner's curse phase. That is final expansion within the land prices, the real estate markets, the stock market, the commodities market as well at the end of a 60-year period. And things are really, really, really starting to get heated. And this is what you see in those end phases. Now, no, it may not feel like that when you look at your altcoin bags, if you've been an altcoin holder, because there's a significant amount of altcoins and not enough liquidity to go around, similar to back in 2013, 14, and 2017, where pretty much everything rallied. You're not going to get the same types of moves. A reminder, I have created videos and shows on that. It was pinned to yesterday's show at the end screen. If you do want to go and watch that, my 2025 portfolio, just type that in on YouTube. That will give you a bit more insight, if you haven't already seen that, what you need to be looking out for when trying to actually create any sort of a portfolio, because it's going to be highly, highly risky for the altcoins. But the majors continue to lead, right? Things like Bitcoin, things like gold, and now suddenly you're starting to see Ethereum pick up. And these are the types of things that will bring the flood of money in the end phase. So very, very, very interesting. But we're still in the seasonally weak period, as we've mentioned, anywhere between that August to September period, even leading into October. Things can draw down a little bit further in terms of the stock market. And the stock market is heavily going to affect what crypto does. But if you can form a strong trading range and you can survive that trading range leading into October, November, you're likely to see a repeat of what we had the previous October, November, that up-only period where things get very, very exciting. And that's where you expect that these types of news headlines come into fruition and everybody opens the floodgates, new liquidity comes in, new money comes in, and then the top altcoins will most likely do very, very, very well. We also have recently just seen the hash ribbons buy indicator kick off over here. This is from Capriol Investments. And basically what this shows is whenever we get this hash ribbons buy indicator, usually the previous low that occurred, it should not be violated. So right now, the previous low is quite far down. This is going to be the previous major low at $98,000. And that does line up, of course, also with that key $100,000 region, which is where your 200 MA and EMA cluster is. So vital support that's going to be coming into this region over here. I don't necessarily expect that we are going to go that low, but if we do, expect that this is just going to be a longer term consolidation and reaccumulation, which would just be lining up for a very, very, very strong Q4 leading into the end of the year, which is where our expectations would be. You start to usher in that final end phase and possibly even the cycle top. So we're going to have a look at what that would look like as well in today's show. Some of the indicators, some of the metrics that you want to look at, and what call it the index of all of these indicators that determine where the top is at. What is that index saying right now? Is it saying that you should hodl your positions, or is it saying that things are too heated already and you should start to look to get out? That's one thing that we do want to discuss today. Another thing that you're seeing, which is typical at these key levels, which is why I say I'm not really convinced that you're even going to make it down that far. Instead, I'm leaning towards that you'll probably backtest this as support. If you even do come down as low as 110,000, you'll probably find some new support coming in over there, some buying pressure over the course of the next 2 weeks. So maybe you put a little bit more downside through the rest of this week, but the low should be found this week. And then you're going to have a little bit of reaccumulation and an attempted move towards the upside over there. And a lot of that's got to do with this as well. Every time the Bitcoin Treasury Company daily sales have exceeded 1,500 over the last cycle, it's been the local price lows. In other words, it's been a buy signal. What does this mean? It's institutions are buying heavily at the bottom over here. And that's why you see the daily sales exceed 1,500 above what the prior cycle was. That becomes a very, very, very strong buy signal when paired up with things like this, like the hash ribbons indicator, which has a very high success rate. Yes, it does fail sometimes, but it's very, very rare. Most of the failures that have occurred on the hash ribbons buy indicators on the daily time frame have been a result of some sort of a black swan that's occurred just after that. So that's one thing to look at over there. If you look at the 3-day time frame as well, it's done exactly the same thing. So on all time frames that matter, hash ribbons buy indicator has officially ticked off. And then lining that up as well over here, if you look at that previous cycle, well, line that up over here, and what do you see? Well, you see over here that the spot ETF inflows have also gone red. And every time you get prolonged periods of negative ETF flows over here, you do put in a local low that's marked by the yellow line, and then your local tops occur on the massive inflows over there. And as Pablo Escobar says over there, when bull moon, right? That's coming up on Friday. And you can add that to the list of confluent factors that you want to be focused on. So if we look at the expanding BBWP, the Bollinger Band with percentile over here, which is vitally significant, I'm not going to lie, it doesn't look good because you broke below the bottom of the trading range, and any rejection that does occur over here from a price action standpoint would indicate that there's a possibility of going lower. So it's going to be vitally important that you see price reclaim some of these key levels back inside the trading range at 116,000. Now, some of the metrics that you want to be looking at are things like this. The bull market peak indicators, how to sell at the top. You can use every type of on-chain metric, every type of overextension away from the mean kind of indicator, as well as what else is happening in the price action analysis. And what you can see over here is it says hold 100% on the HODL side, which means ultimately that right now it is unlikely, according to these indicators, they haven't reached that heated progress territory over here. If you look at the progress, some of them have started to push into the 63% region, such as the pi cycle top indicator, such as the Puel multiple, such as the ETF to BTC ratio. But the vast majority of these indicators are still very cool, which means that ultimately it's probably time to continue to still hodl your position. It is business as usual over here. And this is what we see in terms of business as usual. The BTC market cycle bottom, return on investment from that cycle low. We know that each cycle diminishes in terms of the magnitude of the move, diminishing returns, but sometimes you see lengthening cycles as the cycle becomes longer and longer. And there it is. Cycle 2 is 2014 cycle. There you go. That's correct. There we go. 2013, 2014 cycle. You'll put it in the double top. We'll remove that one. We've been tracking most similar to 2017 and 2021. And this is usually the phase where things get rather exciting. So basically, you need to survive the next 30 to 60 days if the seasonality in the stock market plays out towards the downside. And if that does happen, of course, it is going to bring crypto down with it. But as long as you're reaccumulating within that environment over there, you do probably have at least one more spike towards the upside. Remember, we've been tracking the Elliott wave count with the wave 1 to 5 count. 3 waves up and 2 waves down. Wave 1 is up, wave 2 is down, wave 3 is up, wave 4 is down, and wave 5 is up. And then you got the microstructure within the macro structure. The macro structure, we are currently in the 5th and final wave for this Bitcoin bull market. But in terms of the smaller wave counts that make up that final 5th wave, well, we're currently in that 3rd wave, and that has not yet been invalidated. And the 3rd wave is usually the strongest move, which leads to these aggressive upside moves. So therefore, when you see things like this, it tells you, try not to get shaken out if you can help it. You have to be loyal to your capital, and you need to protect your dollars, of course. But it's probably not the environment to bail out of your positions necessarily. So that's one thing that we're watching over there. Now, of course, we have the Diamond Whale bot. The Diamond Whale bot took its first loss. It's had a very, very, very high hit rate. It took its first loss. We did address this yesterday. It opened up that position on BTC following recently having closed it. So it's given up a lot of those profits on BTC and ETH. But I view this as an opportunity for anybody. It's already back up. Look at that. Back up another $7,000 on top of the initial investment. So when it starts to close those positions, this account, at least I put a 50K account, will be up another $7,000. So for those that were complaining, those that were worried that they missed out, this gives you a second opportunity if you do want to get into the Diamond Whale. It's vitally important to understand that you want to dissociate your emotions from bot trading. The purpose of bot trading is to eliminate the emotions, to take a seat back, and to basically dissociate yourself away from a small percentage of your available capital so that you don't have to do the heavy lifting and heavy thinking and emotional turmoil that the markets bring time and time again. So I've allocated a small percentage of my portfolio into the Diamond Whale bot. And this basically, you need to have a long-term outlook. You need to be holding this for anywhere from 6 to 18 months to realistically get the types of returns which has outperformed Bitcoin's returns, just to be clear. So you can look at all the data. The Diamond Whale bot is available on both Blowfin as well as on Phoenix. The link is in the description below for anyone that does want to join. Here's all the statistics. Feel free, go and have a look. If you look at the, you can see over here what your hit rate is. Trades, 8 taken, winning trades 6, so it only lost the last 2 trades. Here's your return on investment equity curve, giving up some of those profits, and you can see the volatility is 81.42%. So that's one opportunity for those of you that want to get involved. Link in the description below for the Diamond Whale bot. Now, let's carry on over here with Bitcoin. We spoke about this yesterday. We said watch for the rally into the 9 and 18 exponential moving average and the possible rejection and chop in between these two moving averages, in between the red 50 and the 9 and 18. So that's what you're getting. You're looking for a little bit of compression leading into the end of the week. Volatility is going to die off. And then I guess you got to pray to the bull gods that you get the breakout towards the upside. Why? Well, remember, we're coming off of low volatility, and this is a confirmed signal for expansion. If we're going to expand towards the the expansion happens towards the upside over here, but price is expanding on the way down, then of course you're going to be looking for a big move towards the downside. We gave the prior times this happened 43% upside move in January 2023 off of the same signal. February 2025 gave almost a 20% downside move. So, what is this one going to be? That is the question. What is this one going to be? Your high time frame trends like the weekly are still towards the upside, but the daily is beginning to shift very, very, very quickly. So, let's continue on over here. What else are we looking at? We're waiting for that bull moon to come into play. We want to see that RSI immediately reclaim the 50 level. I do want to remind you, if you actually go back in time with this RSI and you have a look over here, a lot of the local lows did occur with these bobbing and weaving points with the RSI dropping below the orange line, which is your 50 mark. Most of the major lows did occur off of that environment. So if we have a look at the liquidation levels, these are going to die off. They're going to become lower and lower. This is typical following major liquidations. You had $1 billion worth of liquidations on both the long and the short side. And consequently, now you're starting to see things taper off and volatility declines. It's happened every single other time. That decline leads to a trading range and an attempted bottoming process. The same is true on the upside. Following major long or major short liquidations, when market participants are short and price spikes towards the upside and marks up aggressively due to those short traders getting liquidated, you tend to form a bit of a trading range over there and then either reaccumulate or you begin to distribute. So we're looking for the exact same thing to take place right now. And a lot of the traders do still remain short on pretty much every single major coin that we're looking at. BTC, Ethereum, Solana, Sui, Sonic, Casper, all of the liquidation deltas are currently sitting at negative over there. And we have more liquidity, way more liquidity on the upside than the downside over the 1 week period, which means at some point it will take time. These things take time to play out. I would anticipate probably around a 2 week period before you see Bitcoin trading back up to about $120,000 to take out that liquidity. And we have the daily exchange volume, which is coming back down. That is going to be expected, right? Following a big move, consolidation again into a tight trading range, attempted reaccumulation, that will drop off the daily exchange volume. And then you want to see if that high low is actually going to form around that $50 billion mark. So still holding up over here. Strong invalidation would have to be below that 110K level, which is going to be that big move. We don't want to engulf that move entirely. So you want to see that support found somewhere within this region. We got the test into the daily fair value gap. Yesterday, we said it's very important that you see a rejection from there. And you did. You got the rejection. You got follow through towards the downside. Now it's okay. You can chop about over here. Let's quickly put in some LARP lines. You can see things mess around here a little bit. But leading into the end of the week, you do want to start to see this continue to drop towards the downside. And that should usher in stablecoins into the crypto market and start to begin to drive prices higher. You also have Bitcoin dominance, which is actually still creating a bear flag. There is a bear flag that's forming over there. The good news is that bear flag should have enough power to break the bull run support line over here for the Bitcoin dominance. If that Bitcoin dominance level does break towards the downside, of course, it's going to start to look really, really good for the rest of the market, especially if it coincides with another big drop over here in the USDT dominance. So I think that one of the most important things you have to focus on is going to be the stock market due to the seasonal weakness that you tend to see over that August-September period. That is highly, highly going to affect what happens over here, whether this is going to reaccumulate towards the upside on Bitcoin dominance, as well as USDT dominance, or if you're going to see that rejection. So seasonally, we know that we've looked at this data before. I don't have the actual spreadsheet for the data, but years ending in 5. I know it sounds ridiculous, but history doesn't always repeat, but it very often rhymes. You guys have heard the saying. Years ending with 5 are typically expansion years towards the upside. And this is a year ending in 5, 2025. So therefore, any seasonal weakness becomes a final opportunity to end the years ending with 5 in a very, very, very strong way. And very interestingly, despite the weakness that you're seeing in a lot of the coins, the index for the altcoins, which is others measured against BTC, is still theoretically holding above that 50% level, following its test into the golden pocket over here. So theoretically, this is major support. Now, of course, you can go into a low time frame if you want to be a little bit more cautious with regards to entering or exiting into trades over here. And you can say that, well, you can wait for this downtrend to break, and you can wait for a little bit of high lows to form, which means you still need to print your first high low. So maybe this pullback over here sets in a bit of a high low over there, and then you can start to move towards the apex and then see if there's going to be a breakout or not. That's for those who want to be, extra cautious in terms of their positioning. But on the daily, this is what it's showing. The daily is showing your first chance or your first opportunity at that yellow line or yellow circle of putting in your high low. So looking for those consolidations, any chop about over here is going to look like reaccumulation and then attempt its move towards the upside. Alrighty. So if we look at ETH testing that fair value gap from a high time frame, I believe this is a weekly fair value gap. There it is. Theoretically, you came back nicely into that level and you are starting to bounce. This is absolutely critical resistance to overcome. If you see ETH breaking and holding above here, $4,200, that's going to be significant for a move up to about 7,000. And that's where you really need to test yourself to see what exactly is happening on the bull market peak indicators. Is this still in hodl at that point when ETH gets to 7K? Or is it starting to push into the red zone? You don't necessarily want to wait for extreme red on the far right-hand side with a strong sell signal to begin to take profits. But instead, if ETH does actually begin to break out of this long-term trading range over here, you already want to have a bit of a strategy that you've already planned out to look to take some of those profits. So we can definitely have a look at a couple of the coins. Again, let's check in over here on your votes. Quickly vote over there in the poll over there. What is your dominant market position right now? Let's just quickly do a refresh over here. Smash the like button as well, guys, and then we'll go into some of the Monday range trades over there. Hardest, are we even public on this? Because it shows that we have 28 people and the stream has stopped. Let's just quickly see what's going on over here. Are we still live? Let's just see over here. What is actually happening on the stream? And then, guys, we'll continue. Let me know in the comments. Can you hear me? Are you registering this? It looks like it. I mean, it just shows that there's nobody watching this, but I can see you guys are here in the chat, which is very odd. There's something very weird going on here. But anyway, let's continue. So since there are people that are here, let's continue. We have the Monday range. The Monday range is going to be vitally important. We've officially printed the Monday high and the Monday low. So since we have the Monday high and the Monday low, last week's Monday range trade strategy failed. This is part of trading. Not every single trading strategy will work 100% of the time, because if it did, I can promise you I would be a multi-billionaire. And I'm sure all of you would be at the minimum multi-millionaires, right? So therefore, you need to pay attention. If you can find a good setup and it starts to provide the opportunity, look to scale into the position. So in terms of the Monday range trade strategy this week, it looks like we have much shallower ranges. Look at that range. Only 1.43%. I'll remind you that the previous week's range was massive, was something like 10 to 12%. Okay, you guys say 𝗕𝗏 had the same issue. Maybe YouTube are updating stuff. The YouTube is an interesting organization. They often do things like this. So as long as you guys can hear me, that's all that matters, right? So I just need to give you all the relevant information and the update. So Monday range, you got Bitcoin trading right now at that Monday range low. There it is. You haven't properly swept it. Of course, as always, guys, look for signs of strength. In this instance, you have to play a much more cautious game right now due to the sketchiness of the stock market potentially pulling back harder. So how do you do that? How do you play a much more cautious game of here? Well, one thing that I'd be looking at is recovering the EMA 50. So the 50 EMA is the red one, but on the 5-minute time frame. So if you see any of your, whatever coin you're trading, whatever is your favorite coin, if you see it hanging around and trading around those Monday lows and it begins to sweep that Monday low, obviously don't buy. Wait until this thing reclaims. But not only reclaims, you want to see that reclaim with the 50 EMA as well, beginning to recover and holding that 50. Rather get into this trade late and then trade it from there back to the high. This is for those DJ and leverage traders out there. Of course, I'm personally subscribing more towards the spot trade. My positioning right now is Ethereum, which we picked up very, very, very low around that 15.5 region. We took some profits. We again reaccumulated at 17.50. That was the one trade. We picked up SUI in that $2 region. That's my second trade. I'm still holding those in terms of spot. And then my third positioning right now is Sonic, which, to be honest, is not going that great, but it's okay. It's the smallest position by a country mile. It's something like less than 1% of my crypto portfolio. And then my other exposure is through the Diamond Whale bot, right? Those are the Diamond Whale is giving me my leverage exposure right now. So that's the way that I'm currently playing the market. And then I have, call it trace amounts of other coins, things like meme coins and things like, that forms about 0.1% of my crypto portfolio. So I'm not mentioning those right now. But if you are the degen leverage trader out there looking for a trade, this is what you want to see. You want to see that deviation of the Monday low. Let's quickly see ETH trading range. ETH is relatively very strong against Bitcoin. Have a look at that. Super interesting. Where's Bitcoin? Bitcoin's hanging around those Monday lows. Where's ETH? ETH hasn't even got close to those Monday lows. There's no trade opportunity over here. You can't take any Monday range trade on ETH. Let's, for the exercise, look at USDT dominance, see where that one's at. So again, just additional confluence for you. If you see USDT dominance trading back towards the Monday high and then sweeping that Monday high, wait for the break of the trend line, wait for that 50 EMA to roll over, and that probably equals your trigger on whatever coin you're specifically looking at over there. Alrighty, XRP, nothing over there, no trade. So this is literally the exercise. This is how you go through the list. You just paste through the list, look at what coins are trading around the Monday low, look at what Bitcoin's doing. Usually you want confluence with Bitcoin doing the same thing. For example, if Bitcoin's hanging around the Monday high and your coin's sweeping the Monday low, probably no trade opportunity. Ideally, you have Bitcoin doing what it's doing right now, and then you find an altcoin that's doing the same thing, and then you should get a bit of a trade opportunity. So here's SUI. This might be a good one to look at. If Bitcoin comes down and sweeps the low a little bit better, and SUI comes down and sweeps its low, that becomes a long trade opportunity up to the highs. Sonic, also, this is another one for the list. Sweep the low, look to Bitcoin, look to USDT. USDT should sweep its high, BTC should sweep its low, and then you get the trade opportunity over there. Let's see, TON, right around those lows as well, so not a bad one. Casper's too high up. Hyper's too high up, can't look at that one. No trade opportunity over there. Cardano, no trade opportunity. Interesting. This one, I would actually go for the short. This would be a good hedge because you just have this absolute perfect buildup of liquidity on Tron. It's too perfect. There's no way this is done by humans or human engineered. This is, call it a form of manipulation or orchestrated move towards the upside, at least in my humble opinion. And consequently, you've just got a break of structure, which means this opens up the short opportunity. So call the TON trade the hedge. Anything that you can pick up as a short near the high over there gives you a 1.86% move towards the downside. Of course, this is only going to work on leverage because you actually have to use a short trade financial instrument to short it. And therefore, you're looking at about 5x leverage on something like that. That will give you close to a 10% move. So any move towards the upside over here, rejection of the 50, if it keeps maintaining under the 50, you also have, of course, maybe we'll put a sad face over there. You got your little red diamond eyes and your sad face deviating the Monday range high. So there's your trade opportunity. You have a bit of a short trade that you can set up over here. Let's quickly put it in. Let's grab our short position over here. So I would be personally looking for something like this. You have two options. One, you can float a stop loss very high above those previous highs, or you can go with a tighter stop and you can say, you know what, on the 5-minute time frame, this is the breakdown that's happening over here. That's your order block. Therefore, you don't want to recover that order block, and this becomes a trade. It's not about the percentage move. It's more about the essentially what you're getting in terms of the risk to reward ratio. So that would be an insane risk to reward ratio. That's giving you about a 10-to-1. That is absolutely enormous. Even if you go in the more conservative route, this is a 3.7-to-1. Now, a reminder, you don't blindly just take the short as it spikes. Rather, let it spike up and observe on the low time frames. These become manual trades that you enter where you're looking for rejection from some of those key levels. Alrighty, let's continue. What else have we got? Let's quickly look at a couple of the meme coins, just see where these things are at in terms of their range. So weak, right? WIF has taken it out. Monday or the Monday low. Pepe still above the Monday low. Bonk below the Monday low. I'm just going to go through very quick. Popcat, not at Monday low yet. Useless on its way there. Mog above. Brett is also above. Ponky, this is maybe one to put on the watch list because it has high liquidity. Ponky's got a lot of liquidity, which means the sweep of the Monday low could provide you with an opportunity. So here's your opportunity. Downsloping trend line over there. You would obviously want to see this break. Let's change the color. Put it in white over there. Let's go on 2 point. There we go. Put it in white over there. 50 is trailing. You don't need to take it at the exact sweep. Again, look to what Bitcoin's doing. If Bitcoin is sweeping, maybe this comes a bit lower. But if this can break above, break that downtrend, 50 is on its way down, recover, put in a big spike, throwbacks into the 50. There we go. Now you have an entry. Buy, stop, trade it to the high. There we go. Does that make sense? Let me know in the comments if that makes sense. It's very important if this does not make sense to you that you just join Whale School. That's giving you a big opportunity of a 6.48% move. That's a nice one. This is something you can take on with a spot trade, right? Remember, what does your financial advisor give you per year? Like 9%. So you can almost outperform his yearly result just with that move towards the upside. Remember, if you do want this information, Whale School, we give all of this to you in lesson format. And then, of course, we do the live workshops as well. If you do want to come to that, 13 days left to go. Use the link in the description below. Let's go through a couple more. Let's look at GOAT. Okay, almost at the low. Very, very, very similar setup to Ponky. So remember, we've got Tron is the head short trade. The rest of them, you're basically looking for long trades over here. Ponky, GOAT, not too bad. Turbo, also on its way to the Monday low, not bad. Fartcoin, very strong, right, relative to the rest. This one would be beautiful because you have the confluence of the yearly open as well, which is double support. View that as double support. Monday low and yearly open all in one. That is Fartcoin. SPX 6900, also relatively strong, still in the middle of nowhere. You can't take that trade. Too illiquid on what is this thing called again? Landwolf. On Andy, which is Landwolf's brother/friend. I don't know if they're brothers or friends, but they know each other. Also very, very illiquid, right? So just forget that one. Let's go to Nairo, also a bit illiquid, I think personally. Mudeng, not bad, not bad. This one's not bad. It's currently deviated. So this could be one that's getting ready very, very, very soon for the degens out there. Again, you don't need to take this trade too early. Just wait for the break. 50 is trailing. So this is probably one of the best examples. 50 is trailing. Wait for the spike. Break through. Break structure. There we go. Clear the previous lower high, which is the order block that led to that accelerated move down. Now you've created your first higher high. There you go. Wait for the throwback to create your first higher low. First high low on the 5-minute time frame, sweeps the Monday low. That's your deviation. Trade it up to the high. What is your size move for this? Percentage move. Okay, let's go from there conservatively, not from the low, but conservatively where you would enter is probably around 16 cents on the confirmation. That is almost a 5% move. Almost a 5% move. Mudeng, this has got enough liquidity. Goku, relatively strong. GigaChad looks so illiquid. This is absolutely unbelievable. I can't believe GigaChad has resorted to this type of liquidity. Unbelievable. Very, very shameful. You're not looking much like a Chad today. Dogecoin is in the middle of no man's land. Too illiquid, butthole, too illiquid. That's it. That is it in terms of the main meme coins that are there. Let's see. What else have we got? Okay, so we've been through the layer ones. We've been through the meme coins. We may as well just finish with the AI coins. Also, big move towards the downside on Tau. Same story. Where is your break of structure? So you would need this to break and get back above 351. If you break and get above 351, you can buy the next high low. So big move up, above 351, throw back, next high low, which will probably get in around that Monday low at about 350. That becomes the trade opportunity, giving you from low to high 3.9%. It's also important to understand, guys, you have to wait for that move to actually happen. There's a time and a place where you can be a bit more aggressive and buy underneath the lows for the deviation. And then there's a time and a place where you need to wait for the confirmation. Today is one of those times and places where you rather want to wait for the confirmation because the risk is still very strong towards the downside. When someone says the risk is towards the upside or the downside, they basically mean their bias is towards the upside or the downside. So if the risk is still strong towards the downside, that's in the very short term. There's still a chance that you pull back a bit more. Bitcoin could sweep its lows, right? You could still see another move, take out all of those stops one more time, and then recover, which is why you want to wait for those confirmations. Very quickly, render. Okay, let me know in the comments what else you guys want. Let's see, render. So middle of no man's land, right? Nothing over there. Grass actually quite strong relative to the rest. And FET also in the middle of no man's land. Alrighty, a lot that we've covered over here today. I definitely don't want to overwhelm you guys too much. I think that we've covered a lot. Let's see if there's anything else we can look at. Let's see. Okay, you guys, but these are DGen things that you want, like Troll. I mean, we can look at Troll. I don't even know if Troll is going to be over here on TradingView. I'm not going to pull out the deck screener today, but we can have a look at Troll. Let's see. Troll, and we will look at this one, perpetuals. Okay. Monday range. Let's actually have a look on a high time frame. So Troll, it has been strong, but of course, I'm assuming this is very illiquid. Like, this is probably like $10 million market cap or something like that, which is why you have to be careful. Big reaccumulation range, get sent towards the upside. Probably, unless you got in early on this, you only want to take this as a low time frame trade, because this will distribute at some point. You can see over here as well, look at the daily with the market cipher B indicator redlining already and starting to kill. Can't move much higher. It's going to eventually pull back over here. If you are wanting to buy the dip on this, then the dip levels are going to be, you have to trail this as it moves higher and higher. But typically, this is going to move at least down to the 50% level, minimum 0.060. It's just whether it happens now or later. So you can drag this up, but I would assume you'll get in earlier than where it's at right now if you just be a bit more patient. When I say earlier, I mean a lower price. Alrighty, cool. Let's see, did the YouTube get fixed? We only have 30 people watching this. Unbelievable. This is a first time ever, but it's okay. Guys, smash the like button so 31 people can join us. And I will see you all on the next one, which is going to be tomorrow. And for the 𝗲𝗚 members, I will see you in 𝗲𝗚 Room for our live session later. Have a good day, everyone, and cheers for now.